Hi, everybody. Hi, Nemo. Very nice to
Hi.
meet you. Can you hear me?
Yes, can hear you loud and clear. Thank you so much for being here, Steph. We are very curious about you. So if you could tell us a little bit about yourself, and yeah, go ahead.
Sure, absolutely. So I'm Steph. I'm French, as you guys can probably hear. Sorry about that. And I've spent the past 7, 8 years working, across the startup space, the investor space, and the corporate innovation kind of space. So I've had exposure to all these worlds, and I've had the chance to that both in Europe, France, Germany, and also in the US. I've spent a couple of years in the San Francisco Bay Area.
And what attracted you to this space, the startup space? Like what clicked
So
or didn't click?
no, if you want the origin story of the villain,
Yeah.
I come from a family of small business owners. So I grew up, my dad was a hotel manager, and I grew up in that like entrepreneurial atmosphere. So I always saw myself, like having my own business at some point. And then growing up, I developed a passion for, the internet, software, all that stuff. And then when I found quite late, actually, I found about this startup thing. At the time, it was, I don't know if this still exists, the startup weekends. This is when I found this for the first time. And I thought, well, that's amazing. Like there is the business and there is the tech stuff put together. And if you're really good at that, actually, you have you're in like modern space with really smart people. There's good money to be made. There's actually seems like people care about what they're doing much more than in traditional, industries. So it was super exciting. So I jumped in and I never looked back.
Awesome, great. But why specifically? Because your own OpenVC that you're creating, we'll go about more detail into it in a couple of minutes. But why specifically into the space of kind of helping startups?
Okay, so my very first job was at Microsoft, and I was running operations for their startup accelerator in Paris at the time. And so I was more on the investor side. I was helping our batches of startups. We had, cohorts of startups every 6 months. So it was, from the very beginning, it was what I did. And I saw them struggle, and I saw them repeat the same mistakes again and again. Mm-hmm. And the most prominent one was how they reached out to investors, or how they failed to reach out to investors. They would all be sitting in the same co-working space with their little spreadsheets, listing down who they should speak with, Googling the names. It's back in like 2014, so you didn't have all those tools that we have today. And I was like, guys, you're all sitting side by side, you're all looking for the same information. How about we create a collaborative, list, a shared tool? So that was the original idea. And then moving forward, this was the origin for OpenVC. Is like, okay, there is a better way to do that, and it's not that difficult. Now we have the tools. Both we have the tools, to kind of host and run that list, and also we have the tools, social media, communities to distribute that online worldwide. And so I don't know if that answers the question, but I was like, okay, there's a better way to do it, and mm-hmm. and we can make this happen. I was actually surprised, like nobody had done that before, and so let's do it.
Very interesting point on what you're saying. That nobody had done that before. I see a lot on LinkedIn that people are now trying to throw in some lists. So it happens very much, even established VCs are going there. So somebody from one of, even there, I saw it like a couple of days ago, a playbook and a list throughout from a very established VC and their general partner. Like these are some of the people you would love to connect with. And if you want, we can share the list with you if you drop a comment. So it was a kind of a lead generation strategy coming from a general partner, not revealing the list, promising a list. So
yeah, it is, and I do that too because it's great. It's great marketing.
Yeah, exactly.
I would say the main difference between all those lists and what we're trying to do is our approach is radically open and free. Mm-hmm. So we're not putting any paywall, we're not putting any artificial friction, not trying to capture and resell your information or generate leads to sell your service after that. That's not the spirit. the original approach, the very first time we described it, we were like, okay, this is Wikipedia for venture capital, right?
Okay.
We're creating a shared resource, everybody can contribute, and we're going to manage that. Now, of course, we're still trying to find ways to monetize because we want to make this sustainable. But the core mission of what we're doing is really serving the venture community at large, as opposed to capturing leads for another product, or maybe doing some content marketing or stuff like that.
Okay, great. But if we go to the startup funding space, so it's like several chunks or several steps. For example, there's the friends, family, and fool first step, and then you go into some sort of soft funding through grants, loans, and everything. And then after that, there comes the stage of some hefty co-founders or angels who can become interested. And then you go to the VC space, then late VC space, and Series A and all. So my question here is that you have a name OpenVC. So open is your philosophy. We can talk a little bit more about that why open. Okay, so we'll talk about that. But also the question that why only VC, or is VC a stand-in over there and you also would like to expand to angels? So those two things, why open, why VC?
Okay, so thank you. That's a great question. I love it. And before I answer, I'm just not sure that the chat is activated for everybody, or is it?
I'm thinking here. Hold on.
Just want to make
sure.
So
anybody can say hi, put in their names here. Let's see. Okay, I see. Yes, there is an issue as usual. Happened like 3 events ago as well.
Okay.
So Zoom has put some security controls for some reason. So when you start an event, suddenly everything is gone.
Okay, it's working
now. It's enabled.
Amazing. Hey guys. Hey Wilson. Hi. Hey Mattis. Hey Urban.
Okay. Awesome. Please put your links of your startups and everything in all questions. Please go ahead. Let's make it very, very active.
Okay, and so now I'm going to answer the questions. Yeah. So do we only focus on VC? Originally, yes, that was the concept. But the big news, and it's actually fresh from this morning, now we have, that's a first, like we haven't unveiled this yet. And now we have like angels and accelerators actually, and startup studios. We just pushed the new features online. So it's not, we don't have a lot of records yet because people are going to add, that's the open approach. But hopefully in the next, 3-4 weeks, we're going to have a few hundreds of those on top of this VCs. So the idea is, as a founder, what I'm looking for is funding, right? And whether it comes from an angel or from a VC, you should be able to find this in one place. We want to be the front door into venture capital as at large. And so that's the first answer. Now, why open? So we realized, so first it's cool, right? It's fun. I didn't want to sell a list. Some people do that. It's okay. It's a business. But I think there is something better to do. And then number two, it's really hard to maintain such a list, and and you have tons of lists, like Crunchbase, Prequin, PitchBook. And what those guys do is usually they kind of scrape data, they gather data, they maybe have some analysts who clean up the data. But at the end of the day, it's still second-hand data, right? So you don't have the truth directly from the investor's mouth. What we do is everything you find that is marked as verified on OpenVC comes directly from the investor. So they are the one who fill the data and they tell us, this is what we invest in, this is what we want, this is what we don't want. And so we feel that as founders, this is super valuable, and it's more actionable than just scrape data. And on top of that, the investors we have, they want to be contacted, they want to be found. They tell us, okay, this is how I want to receive deal flow. And this was kind of the missing the missing piece in the funding space, in our opinion. That's why we created it. How
authentic the data needs to be, or because you are in this space and there are many people who are trying to do, there are matchmaking applications there and everything. Two things that come to my mind are that how do you maintain sanity in the platform? By sanity, I mean that because when you're trying to make 2 sides of market meet or 3 sides of the market meet, there could be a lot of communication just going out, and most of that can be trash as well, because everybody is you can just send, like if you go on Facebook and start sending random 100 friend requests, like what happened? So how do you, as a platform, limit overload on either side, on
Yeah.
the VC or the
Okay, so this really comes down to product design and how you design your product to manage that. So we did a bit of what we call hostile design. For example, as a founder, you won't be able to spam VCs. Obviously, that's the main concern, right? I'm an investor, I don't want to be spammed by low quality deals. So the way the product is designed, it's like a funnel, and you're gonna have to go through several steps, and it's gonna be slow and long and painful for you if you try to spam investors. So that's number one. And then number two, when you reach out through our email submission feature, so you can directly reach out to VCs through our system, we screen the deal flow. So we don't do a due diligence or anything like that. We just very quickly check the email, check the pitch deck, and make sure it's reasonable. We don't want to replace the VCs. We don't do their job. But I mean, I don't know if people realize that. There's a lot of people spamming VCs with out of scope or low quality stuff, or sometimes, I mean, flat out crazy people. We've had that's what we call the shit flow. There's deal flow and there's shit flow. And yeah, sorry, my French, but that's really, I mean, that's how a VC described it to me, right? Say we don't want the shit flow, and so I took that word, I keep it, because it's true. There is a kind of really bottom 10%, or like bottom, let's say 50%. And the terrible thing is, these people who spam and don't qualify before they send the email, don't target well, they ruin the game for everybody else. That's what's happening. And that's why investors don't trust the cold flow, because they receive 10 emails per day, like 8 are really bad. And the last 2 is variable. Sometimes it's really good, sometimes it's average, because also people don't put the effort to really craft a great email, customize it, etc. So they're kind of destroying that whole channel for everybody. And that's why VCs rely on warm intros. So our goal is to create a kind of intermediate channel between cold emails and warm intros, where when it comes through OpenVC, the investors know, okay, it has been pre-filtered. We don't guarantee it's going to be top 1%, right? It's not our job, but we guarantee you're not going to receive the bottom 50%. You're not going to receive anything that is out of scope or anything that is really, really bad, And I don't want to point fingers, but we have a kind of hole of horrors internally. I will show you that, after, like, when we're out of the Zoom conversation, and you have, like, honestly, like crazy stuff. Crazy stuff.
Okay, great. Thank you for the insight. One more question. Do you try to do some sort of a validation on your end when it comes to both the VCs or the startup side? Are there mechanisms, like if this is a rightly qualified startup or a VC or somebody posing as an investor? Because that could also happen in a space when you're trying to make a two-sided or three-sided marketplace.
So we have a few things. Every time an investor creates a new investor profile, we manually check that. So what do we check? We check 2 things at least. One is we check their profile against their website. So, if they have a website that seems legit, then it's a good signal. And then when they create the profile, we check the email address they use to verify the profile. Okay. So on OpenVC, we have 2 levels of data. You have the verified funds and non-verified funds.
Oh, okay.
The verified funds, they are legit. They have been, double checked with someone from the firm, all the data in there, less than 12 months ago. So that it's recent, those people are active and they're actively investing. And they appear at the top of the search results. So effectively today, unless you go, 10 pages to the right, you're not gonna see any unreliable data points. That's on the VC side. We had very, very few. We were very concerned before we launched about people misbehaving. We didn't have really much of that. A few times it's like fundraising advisors who try to pass for investors, but we became really good at catching them, so it doesn't happen anymore.
Okay, very good point. Let's focus a little bit on OpenVC itself as your. Before we go into the general questions on fundraising, I think that we can do in around 7-8 minutes or so. But let's go a little bit to OpenVC side and talk about, because you entered a very, very crowded space. where people are claiming a lot of things, claim to have a lot of information, and then try to match make connections. There are models like finder fees, which intervene. VCs on the other side are also saying that we get, let's say, X thousand deals, and then we have an internal platform to vet it out. So you went into this highly competitive space and created something.
Yeah.
How was the experience of the first 100 on the platform versus the first 1,000? Like, if you can tell us a little bit about your own build-up journey of OpenVC.
Yeah. So we made a very strong decision from the start, which is we said, okay, basically, I mean, I don't know if we're broadcasting in the US, but basically, fuck the business model, right? We threw the business model out the window. And this allowed us to be very aggressive in a very competitive space. We're like, okay, there's a ton of people doing little things, you know, and some are really interesting, but nobody has managed to crack that problem at scale. The one people who do that really well are, you know, accelerators or fundraising advisors. They do that well on a smaller scale, on a local scale. Sometimes you have networks of, you know, of those people, and they do a good job. But if you really want to crack that on a global scale, especially at early stage when there is very little cash available, I think you have to be creative, and you're not gonna sell a subscription, and you're not gonna take a commission fee, because if you do that, you're gonna create the wrong incentives, you're gonna have the wrong people on the platform. And so once we've done that, then we found out it's very easy to grow, because you're in a space where everybody is hungry for information, for data, especially for quality products. And if you're free and you don't have any, you know, hidden agenda, then it's a no-brainer. Okay. I like to compare it to, you know, if you have you have an event for startups and you have a free buffet, you're gonna have a lot of people, because damn, those founders are hungry, right? Nobody's feeding them. So that's what we're doing here.
Okay, great. And you were also on Product Hunt. How was that experience?
Oh, that was something. So we launched, so it was like March 11 of last year, and we got #1 of the day, then #1 of the month, which is you know, a big achievement for a product hunt launch in general, because there are like what, 12 per year, and it was like, I was not very familiar with Product Hunt at the time. I put in a lot of effort to learn about it. I worked a lot with Lucas, my co-founder. There are two of us. OpenVC is really just the two of us. We put a lot of effort in that launch. He came here to Paris, slept, you know, on my sofa for a couple of nights. We didn't sleep for 24 hours, literally. So it was very exciting. And it went really well. It brought us a lot of attention, brought us a lot of positive signal, a lot of motivation too, you know, because at some point you work on something, you need some validation to have the kind of fire to keep pushing. And so this was in March, we had the Product of the Month, and then we got selected for Product of the Year in December. We lost. But I mean, when you look at the other guys in front of us, like one of the guys who won were Software.io, which is a great product. The guys raised like 13 millions with I don't know, a tier 1, you know, VC firm. So it's fair, you know, they can win. It's okay. They can win.
Got it. But the journey itself was fun. So that's great to hear.
A lot of work, a lot of fun. Yes.
Yeah. I'll pick up some of the questions, because otherwise we run the risk of that it'll become very difficult to go back to the earlier part of the chat. So Sebastian has a question. What about family funds, often more relevant than VC at early stage? So are you people also considering that? It's way up in the chat at 12:15. Sebastian wrote, like, are you considering family funds to be on your app or the platform? Yeah.
So I'm not sure. Are we talking about family offices, maybe?
Yeah, family offices.
So we do have a few, but those people, they're usually pretty secretive. They're not like VCs trying to build a brand. I mean, if we're talking about family offices, you know, single family offices or multi-family offices, they are usually very secretive. So we usually not sign up. It's very rare. So we would love to have them, you know, but just not.
Got it. And then we have, and thank you so much for messaging on LinkedIn. We resolved the chat issue. Ram has a question. How do you monetize?
Good question. So we as of today, because this is something we're working on, may change, but we don't have really a subscription of any type. We're thinking about maybe introducing kind of membership, but we'll see. How we monetize is we have affiliation links. So we have some small advertisements on the platform, and if you click and buy one of the products, we get 10 to 25% of that. Okay. And so all products that I personally like created and selected. So let's say you need a pitch deck template, for your pitch deck. I have a probably the biggest benchmark on the internet for that I did myself. Okay. And I selected for you the top 2, and I thought, okay, you can buy from those guys. It's the best stuff on the market. So that's how we do it. We have some donations. We have a few donations on coffee.com if you guys want to support us. And that's it for now. We're gonna basically try to increase traffic, to increase affiliation, and maybe ship some premium features at some point. But for now, everything that is free will remain free, right? So it's really gonna be top features for premium users, for advanced users, but most people will be happy to use it for free.
We have a question from Eleonora. Where can I find the list? So then Luca has responded already. For everybody there, it's www.openvc.app. Okay, yep. That's where you can find the platform. Let's see. Let me go down a little bit. Scott has given an intro. Some VCs on the platform are asking for warm contacts. How do I do that? It's warm.
Yeah, so VCs have 3 options on OpenVC. They can accept cold emails. They can put up a form to receive deal flow through the form, or they can say, I don't want cold deal flow. You guys find an intro. So on average, 24–25% of the funds prefer warm intros. So we don't have a way to help you with that. We provide you with a LinkedIn account, so you can maybe find some mutual connections, but that's all we can do here. We don't want to force people to accept cold outreach if they don't want to. That's not the spirit. We try to be founder friendly and VC friendly. So that's a balance. Yeah, that's
got it. Then Urban has a question. How do you make sure you have up-to-date and relevant information? I find some of other paid platforms not to be. How is your platform current?
I love that question, because yes, other paid platforms don't have accurate information, and a free platform has, and it's because it's free. So for investors, they have a kind of moral incentive to contribute because it's their brand, it's their name, they want to be up to date. We have this verification. Basically, our data comes directly from the investors. We don't scrape data. We don't plug to other databases. It's all our own data. And it's provided not from us, it's provided from the investors, and we double check that. So that's why it's accurate. Now, if the investors put something wrong, then of course we cannot control that, but 99% of the case, it's gonna be accurate.
Yeah, it's your reputation at stake. So you're double checking the information as an investor before putting that, of course. So that will be accurate. So it's a great point over there. Shane, I see that you have an EdTech SaaS. Do attend the next event with you and Corona. And that is for everyone here. If you are in B2B or SaaS space, do attend the next event. It'll be a lot of in-depth insight coming in from Sweden's leading expert on the SaaS and B2B space. Let's see if we have any questions. Otherwise, we move forward. 253 family offices. Luca, thank you for that information. Do you block or let it go even if you think do you block or let it go even if you think it's not a good pitch deck?
We block.
Okay.
We block because it's in nobody's interest to send a weak submission, right? The investor is not going to like it, so he's not going to reply to you. So you're going to lose your first impression, which is bad. And then it's going to affect the image of OpenVC. And so next time we send something, the investor will not believe it's good. So it's in everybody's interest that the quality of what we send is good. And we will provide feedback about how to improve. So we have a lot of online resource about how to build your pitch deck, how to craft your cold email. We have templates. We have a really good template we released last week for your cold email. You can check this out.
Okay, great. Let's jump into some more general topics now, and then we come back to OpenVC again. I don't know if you want to show the platform or a demo for a couple of minutes. A couple of weeks ago, we had Timico here. They showed an awesome demo of their open office and all. So virtual office. So that was good. So
if people want, do people want a demo?
I don't know, maybe just show the site and just take it back.
Okay.
Half a minute, I don't know.
Okay, I cannot share my screen though.
Yeah, I need to fix that from here. Hold on.
Okay.
Yes. Try now.
Okay. So it's very easy. If you have used Google, you can use OpenVC. So basically, you're going to be able to say, okay, let's say you're like a fintech startup in Germany. You're going to say fintech. You can add a few more information. Let's say you're a fintech marketplace for consumers. So you're going to say marketplace. And you see we have some suggestions here, and then consumers, or you could say B2C, whatever. It's pretty smart. That's because Lucas built it, so it's smart. Then here you can pick the country. Maybe you can say you're at, I don't know, pre-revenue stage. So you can pick 1 or 2 stages. Let's do this. And you're going to have a short list here of investors. So you see here, I have 68 results. And you see that they're ranked by relevance. So the top ones are the most relevant. And then as you scroll down, they're less and less relevant. And if you want to reach out to people, just click submit deck here. And you have 3 steps to send your cold email. That's pretty much it.
That was quick. I hope everybody captured that.
You asked me to do it quick, so.
Yeah, no, that's good. That's as quick as an elevator pitch. So love that. Love the speed. But coming back, like overall, based on your experience of building the platform, what do you think? Let's talk about startups. Okay, where do they go wrong in pitching or reaching out to investors?
So, so this is gonna be the unpleasant moment because you know, we often say a startup is like a baby to a founder, and this is the moment when I tell you that your baby is ugly, and nobody wants to hear their baby is ugly. And so I would say the first problem is founders have a hard time understanding where they fit on the funding market. You know, are they top 10% or bottom 10%? And it doesn't mean that the founder is bad or the company is bad. It means you're not ready to be funded. And there is a real challenge here, especially for first-time founders. If you've never raised funds before, you don't know what the rules of the game are. So you have to play the game, but you don't exactly know the rules. And it's not easy to understand because it's a complex space. So for example, people want to raise funds from VCs, but they don't have a product or they don't have revenue. And most VCs will not invest pre-product. Some will, but that's a minority. Most of them want to see at least a product, maybe even some revenue. Angel investors, yes, angel investors, they can invest pre-product. But understanding these kind of nuances is really, really difficult for a lot of founders. The same way that, you know, investors have geographic focus, right? Some investors will invest in Germany or in the US, but not in France. And you're not going to change that. So there is no point. I see someone in the chat asking, can I select more countries than the HQ? Well, but the thing is, this is designed to show you the investors that invest in your country because they have a mandate to invest in that country, not in the others. So there's no point in trying to force to bend things to fit with your company. It doesn't work like that. So that's the first thing, not understanding the rules of the game. The second thing is not having signal. If you want to raise funds, you need to have something that we call signal. So signal is going to be having something really exciting about your startup. And that's not necessarily fair, you know, it's not a fair game. But something like you have a founder who has a previous exit, you know, who sold previous business successfully. So of course, it's going to be very exciting. You have some very strong growth in revenue or in users, you know, something above, we usually say 20% month-over-month growth for SaaS startups is a good number. You have already secured a lead investor. Then you're going to find it much easier to close your round. And so there are like that a million little rules that are not super transparent, and investors will never tell you the truth when they pass. And you need to understand that as a founder. That's my rule. If you reach out to an investor, you know, once, twice, they don't reply, or they tell you, yeah, I'll update you, whatever. If you don't have a reply within a week, I mean, the deal is dead. They're never going to tell you no. Investors, VCs especially, they never say no because they have no reason to break the relationship. Maybe they think you're bad, but 2 weeks later, Sequoia wants to invest. And suddenly they want to invest because, they are sheep and they just follow the herd. So they will never stop. But when you're a founder, you tend to cling to every bit of hope. So if someone doesn't tell you no, you think, oh, it can still be a yes. But that's not realistic. So you need to hear that if you don't have positive signal and if you don't hear from the investors quickly, it's dead and you need to find another route. So also understand that investors will not just invest in an idea or in a pitch deck or in a motivated team. That's not enough. You need to have some tangible facts and signal, and that's so we have a whole post about that. But I'm sorry, it's not very structured. I'm going.
No, it's really awesome because you're talking about startups need to figure out if their product has an appetite out there in the market. They really need to know if they are going after investors in the right geography, because of course funds have mandates. So for example, a Nordic fund will not go into Asian market to go and invest, because that's now how, because fund, something for the startups here to know is a fund is very much like a startup on its own, because they have raised money from these big investors, family offices, so they have a mandate to follow, which means they are guidelines under which, or a box in which they are operating. So you cannot put something which is way off the box for them. So they'll stick in the box. So that's very important.
One example that I see is it's typical. Let's say an investor has a typical check size of $1 million. So they're going to invest on average, first check 1 million. And some founder tells me, oh, I should reach out to these guys because I only need 100K. But that's not how it works. The investors, they have their own portfolio construction strategy. So they do $1 million tickets because they plan to deploy capital a certain way to get their return on investment. They're not going to look at 100K deal 99% of the cases.
Yeah.
So this kind of nuances are sometimes hard to to understand for founders.
But I think your second part, because you first talked about there has to be appetite for your product. You need to realize that you are, because there's very few funds who will go after pre-product startups. Maybe angels will fall for it, and the geography you mentioned. But then you talked about something very interesting, signal. You talked about having some sort of an exit, some sort of traction matrix, like you talked about a 20% month-on-month growth for SaaS, and having lead investors. What other traction signals or can founders have to support their case?
So I actually have a slide about that.
Great.
So guys, this is some exclusive stuff. It's not public yet. It's something I'm working on. I'm going to release very soon. And I'm trying to tell founders, okay, this is signal, this is not signal, and this is kind of in between. So if we just quickly look at signal, strong signal, so this is a kind of unfair advantage. You have already a lead investor, you have super strong growth, you have a big contract secured with a big player. Okay, you're in the on the golden road. That's fine. Then on the other side, you have a lot of founders who say, yeah, I have a mock-up, I have an MVP. Okay, but are they users? What an MVP is not an achievement per se. An MVP is just an asset to validate something. You are in talks with some fund, but everybody's talking with everybody. So this is weak, or it's not signal. You have a motivated team. This is table stakes. You're supposed to have a motivated team. So if you reach out to an investor and all you have to say is, yeah, we have an MVP with a motivated team and we're talking to funds A and B, this is, for me, it's super weak. And also it tells me as an investor, I'm not an investor, but if I were an investor, it would tell me that you don't understand how this game works. And I don't have the time to teach you. So it's unfair, but that's what it is. So you really need to hear that. On the other hand, you tell me, okay, maybe I don't have signal as it should be, but at least I have, some users, I have a pilot in progress, I have, a team that is maybe not a proven team, but that has achieved things in the past with a track record or something. Then we can start talking. And that's and again, this is going to be if you go cold. You know, if you want to contact investors cold, you absolutely need signal. If you have pre-existing relations, maybe you don't need that much signal because you have a way in, and that's your kind of advantage. But otherwise, signal, of course, is the way to go.
This was absolutely awesome. I hope everybody kind of picked up some thoughts, because many of the very early stage startups are actually on the right side of the, because they have created a startup. There's a lot of passion in the team, but then you're very right that VC market is not out there to teach. They have the money and they want these startups to become real businesses. So nobody is giving charity. It's more like they want to run their business through your startup. So it really needs to work like that. So
and just because I see a comment here, somebody says this confirms the old bias. Yes, absolutely. This is an unfair industry. It's not an industry that gives a shot at first-time founders or people who have a great idea. It's not their job. Their job is to get a return on the money they invest, and so they're gonna pick what seems the least risky. So if you want people who really take a risk, talk with angels, talk with accelerators. Those people are more in the risk business, and that's the way it is. Like OpenVC, for example, right? It's my own baby. But I'm going to tell you, probably not ready to raise funds with a VC. Like I wouldn't go and raise funds. We have maybe 25,000 monthly users right now, right? Unique, or maybe 30,000 now. We have a product. We had product of the year or product of the month, whatever. But I know that if I have to put myself on the funding market right now, I may be in the top 50%, but I'm not in the top 20%, right? So I need to work more. I need to bootstrap longer. And then yeah, I may be able to raise or not.
Anne has raised a very interesting question, and very important one. So the women will continue to fight for 1% of the funding. Very good point. I am very passionate. So Steph, if I could first take that, I'll try to respond to that question. The point is, it's not only the VC market that's kind of structured in a way that women and minority founders cannot get access. There are access barriers in every part of ecosystem. So I think the easiest barrier right now to remove is if organizations which are at the first stage of, how would you say, support network, like if we say Companion, Almi, and others, they need to be making sure that they are helping female founders and founders who don't have access to capital to create really good and stable business models out there. Because if they are not opening their access doors, so it's like the first gate in the funnel. At Companion, we try to have like 50% founders who are female founders, but many accelerators, for example, are still not there. So I think that level of first level and a second, first is the first level of advisory processes need to be very open. Second is accelerators need to be very open. Third is we need to make it a level playing field where these founders can actually create traction, because traction is something which the VC industry is kind of measuring. So there needs to be traction generation programs or some sort of support network. And then we come to the last part, which is the VC part. And VC part, of course, as you are saying, Steph, they are just measuring the money metric because they are also funded by pension funds and all that, which really want a return on the money at the end. So no matter how much hard talk we have on impact, I don't know how much of it is actually going into their decision metric of funding. So I think that's a sad truth about the VC market.
Yeah, 100%.
Brilliant. Let's move forward from there and let's go to something even more basic. So when you are constructing your first cold email or an email to, let's go there. You roast a lot of pitch decks and all. I'd really like to touch that area. Like what is some advice? Is email really the right way to go? How should you kind of get yourself in a market which is so competitive to make way for your startup?
Okay. So ideally, you're not going to need emails, because in a perfect world, you already know who your investors are going to be, because you've worked with them before, maybe you've raised funds before, you're already in that world, right? That's not most of us, but that's a lot of the people who get funded. So that's the first layer. And so if we take a step back, we often say there are two ways to connect to access investors: intros and cold emails. I think it's not correct. I think there are actually four ways. So number one is the intros that we discussed, when someone makes an intro to someone that connects you with an investor, and because there is a trusted person in the middle, it creates more more chances to be funded. Now, okay, if we have time later, I'll go a bit more in depth, but we could say a few things here. Cold emails, for me, should be the last resort once you've used up the other two. The other two, one is pre-existing network. You know these investors already, and they don't have actually to be big investors, especially if you are at super early stage. Actually, I can show you probably this slide here. I'll do that very quick. I know we are running out of time, right? So I'll try to be quick. Okay. So this is basically, can you see my screen?
Yeah.
Okay, so this is a graph that I call you, your mom, and Marc Andreessen. And it's basically how you build your funding path from people that you know to big investors that you don't know. And so what's gonna happen is you're usually your existing network, it doesn't have to be people who invest 50K or 100K. If you are at early stage, raising a pre-seed round and even a small seed round, it's perfectly fine to raise with small checks, people who you know, your mom, your ex-boss. This is typical. Your ex-boss is going to invest 5, 10K. And those people are going to bring their network with them. And so a good warm intro is an intro from someone who invests to someone he wants to bring on board. So it's not going to be, honestly, an intro from someone who doesn't invest with you, it's kind of a weak intro. It's not even a warm intro, because it's a bad signal. If it's a great opportunity, why don't you invest? Okay, so first, small checks are fine. 1K checks, 2K checks are fine for a small round. 2, intros are good when they come from people who invest. 3, the third channel that we don't discuss is inbound. But actually, inbound is a thing. You can have investors who reach out to you. So now you have to engineer that. It doesn't happen out of the blue. You're going to be active on social media, active on especially some channels where your industry is very strong. So for example, if you're in Web3, it's going to be Twitter, it's going to be Discord. There are maybe some, some publications or environments where you have to be active. And if what you're building makes sense, investors will find you and investors will reach out to you. So that's the inbound. And then once you have those 3 channels, existing network, intros, and inbound, you should have, I don't know, 20, 30% of your round. Now that you have that, maybe you need more. And that's when you start cold emailing. But at least you need that core secured. Otherwise, it's going to be very hard to convince people, because if you reach out to me cold and tell me you don't have anybody around you who's willing to, put 10K down, I'm going to have concerns, because I don't know you. Why should I? If nobody who knows you and trusts you is willing to do that, why should I? And so that's kind of my answer to that. And then after that, the emails themselves, we can discuss how to build them, how to build the templates, and the structure of that should be short, to the point, show the signals, all that stuff. But just wanted to remind people that, yeah, the emails, they come in like phase 2, right? Phase 1 is to try to maximize your existing network and your intros.
Okay, we'll take 1 or 2 community questions before wrapping up the chat today. Could you please share how did you build up the database of investors on the platform? Julia has that question.
So how did we build the beta?
How did you build up the database of investors on the platform?
Okay, so we made it very easy for them to sign up and to add information, very little friction. We use the Airtable and the custom coded front end. And then what we did is at the beginning, I put myself a lot of data, and a lot of it was wrong. And this pissed off a lot of VCs. They're like, why you say wrong things about my fund? And especially, now they have brand managers and head of communications. Those guys, I get really, terrible emails. And so I was like, hey, sorry, here is a link to update your data. and I basically push the buttons to make them fix the data themselves. So that's how we did it. And now it's all organic.
Okay. Anne has a question. Do you see any difference in quality between decks from minority-led teams, female-led teams, and traditional-looking teams?
Not any more than any other team. There are some really bad ones, and there are some really good ones. I've seen decks that are awesome from minority founders, and decks that are really, really absolutely catastrophic. So it's like everybody else. I mean, in my experience, at least. Okay.
What are your plans? If we can bring our discussion to that final question, what are your plans going forward? You've made a great headway from that product hunt in March last year, you said, to and then product of the day, product of the month. Great journey. And now, what are you clocking at right now? 4,000 VCs or what?
Yeah, almost 5. Okay. The plan is to go full time first. Okay. We're still not full time because we don't make enough money from this. So now, between now and let's say February or March, we would love to get to 10 or 20K in monthly revenue. Okay, that would allow Lucas and I to go full time, and then we can build more. There's a lot that people want and expect us to do, but there's only so much we can do right now. We prioritize like crazy. If you want to reset your password, you have. We just pushed this morning, but until yesterday, when you click reset password, it says like email Stéphane to ask to reset your password. That's how lean we are. So now we have a lot of product to build, and we need to get to, I'd say, profitability, right? Okay. Great. Steph, thank you. If community has some questions, any last questions and thoughts, just write them very quickly. We are wrapping this up. Steph, what an awesome journey in building something so much needed for the startup space. And what I find very interesting is that you're very humble in your own build-up process while you're doing a great service with these thousands of VC contacts for all other startups. So thank you for doing this big service for the startup ecosystems, communities, and startups themselves. But not only that, you have some very strong, incisive points for startups, like very real indicators. So I think it's good to have that level of honest feedback coming out from the industry. So thank you for today. And where are you based? That's one question. Maybe we can take that. So I usually travel a lot. So I'm kind of how do you say, like a digital nomad, whatever it is. And Lucas, my co-founder, is based in La Bassée, which is a small town in the north of France. So yeah, let's say awesome. we're French, but we travel. Perfect. Thank you so much, Steph, for today, and have a great day. That was amazing.